I mean, if you just look at in the most simplistic way, the markets hit all-time highs, didn't sell off after that, right? Had every reason to move in a more distinct manner. It did not. If unemployment peaks at 4.4% and stays there, and that's the highest we see it, that's pretty good too. By many accounts, some would say that he actually stuck the landing. If this all pans out, he stuck the landing, mission accomplished.
Yeah, I think the main comment that I took away
again, by the way.
Yeah, there's more gymnasts. But that worked better during the Olympics. That was Peacock, by the way. I think the main comment that I took away was that risks are balanced between their dual mandate, right? So they feel very confident that they're going to get down to 2%, inflation. He said over the course of this year on many occasions that they are not going to wait to lower interest rates until they get down there, right? And so now you have 3.6 to 4.4 in the unemployment rate, and he just said they want to support these levels, and he did say that they are historically low, right? So you take the stock market, you take the way mortgage rates have come down from above 7% to below 6%. He did spend some time talking about rents and the housing market. He said that was the one sort of laggard sort of situation. And he also said that we get he didn't say the cumulative factor of inflation, but he did highlight the fact who that hurts the most, right? And so I think this move is definitely focused on the lower end of the economy. And so I think it made sense. And so when you just put it all together here, man, like there was more, I think, anticipation for this than there should have been. And I think that NVIDIA's earnings last month were probably more exciting than this. And we asked that question on many occasions in August.
A couple things. So I think the last two times they've started the rate cutting cycle with 50 basis points was, I want to say January of 2001, market went down 40% over the next year and a half. And again in September, I'm reading, of 2007, over the next year, the market went down about 50%. Okay, so that's not enough data, but that's just anecdotally, that's an interesting thing to look at. The two things that I took away from today, the reversal in the S&P, we talked about the reversal the other day to the upside. Well, you got a reversal to the downside. And the bond market today is really interesting. And we've said this 100 times. It's not the inversion. The inversion is the warning sign. It's the re-steepening. And you saw it in spades over the last couple of days. So let's see how this all plays out. The move in the bond market today was interesting. And the fact that the VIX actually closed higher on the day, I think, today is interesting.